What's up, everybody? Tom here with another video. Well, Tesla has just topped 1 trillion and it did it faster than even I expected. We'll be talking about that and more in today's video, including our technical analysis for the S&P 500, Nasdaq, Tesla, Apple, the FANG, Facebook after earnings, and of course also silver and Bitcoin. There's a lot to go through and some exciting news in what is the biggest week of earnings we've seen for quite some time. Stay tuned, guys. This will be a good one. All right, so we're in big earnings, and this means, of course, we've seen the start of these FANG stocks coming out. Facebook earnings tops 9 billion, but Apple change will put sales in the hot seat. Also, we did see a slight increase in the overall users monthly and daily for Facebook. What the result was and what the post market actually is very interesting. It went down about 3.71%, then went straight back up and ended in the close, I think, up around 2.5 to 2.9%. So a big switch here, and this is off the back of a lot of the price being packed in by Snap last week. Of course, Snap had bad earnings. Facebook all of a sudden did go down. Another thing that was happening during the day is Tesla was up huge, $1 trillion, as we mentioned. Hertz planned to buy 100,000 Tesla EVs. This is taking it mainstream. Of course, massive news. If you're putting a fleet together, this means that other businesses will start to put fleets together, and it is basically the second coming of Tesla when you think about it from that action. All these businesses now going to start to think about it since Hertz is doing it. You've got Avis as well. You've got companies all over the world that might start to do this because they see a lot of demand for people wanting to even try Teslas out in their higher networks. So I think this is a big step forward. And of course, it comes off the back of a pretty stellar earnings from Tesla. And when we take a look here at the heat map, you'll see it. Everybody sees it over here on the right-hand side, 12.66%. We'll talk about the technicals soon for that, along with everything else. We had Nvidia coming out strong, Disney holding its support fairly well, and lackluster from the rest of the FANG. They were down a little bit and then they did recover. So we'll talk about all of those. But overall, it was a mixture day. If we take a look at the actual indices, you'll notice that the Nasdaq was up 1.04%. Tesla helped that one. IWM up 0.95%. Probably where a little bit of value is still in IWM. We might have a look at that over the next coming days. S&P 500 snapping to a new all-time high, and the Dow also coming up 0.18%. Just really people being a little bit worried about whether these tech stocks can make good earnings. And then once we see that flow through, I think you'll have continuous strength coming in the markets. XLY, consumer discretionary, by far the best, along with TAN as well, the solar active index. That was pretty big. XLE energy doing well, and we finally get a breakout for IBB. Biotech coming back in. It's been pretty languishing for a while there, and it has come in strong. Materials also showing a good strength through things like the steel companies and a few of those others. Let's think about Schroders, what's going on here and why I bring this up. Just a bit of an idea about inflation-based trades. Now, I showed this on the stream and I thought I'd just quickly bring it here so people have a bit of an idea. And this is data taken from 1973 to 2020. And basically what it shows is things that outperform based on inflationary kind of metrics. If you believe inflation is happening right now, these are some of the sectors that they've found in the study that have done well. So you've got precious mining and metals, you've got utilities, healthcare, one of our favorites here, equity REITs, energy, consumer staples, and of course financials is there as well. So an interesting one, should you believe that the US 10-year and of course overall inflation is getting a little bit out of control. Big earnings week this week. We had just had Facebook come out. We've had Logitech come out. We now have a huge close. Join us for the live stream because we will be live streaming the close. AMD, Microsoft, Alphabet, so Google, Visa, Twitter, Robinhood, Enphase. What a huge day Tuesday close will be. And that should give us a huge direction on what the market does next. I expect a lot of those companies to do quite well, as does the street, so it'll have to hold up. VIX, the volatility index, staying at all-time lows here, 15, or not all-time lows, but lows recently, 15.25. The volatility index, since it's come down here, has tended to spike around this zone, and maybe if one of these big companies misses by in a huge way, it will spike the volatility. But overall, this just shows that the market is feeling pretty good. The fears come out of the market, all that Evergrande stuff and debt ceiling and all the things have been pushed a little bit away for now, and the market's feeling pretty good about it. But as we know, when everyone's not fearful sometimes and there's a little bit of greed going on in the markets, sometimes that's a good way to switch. I also want to bring silver back into the discussion because it's had some good technicals that have held up so far. So it had a break of the downward trend line. Now, I believe silver and gold. Got Tesla on the mind today, guys. I got silver and gold. They've moved through the point of, a little bit of recovery. Now, we had that inverse head and shoulders here with the left shoulder, the head, and the right shoulder. It then got through the downward trend line, came back, tested the conservative entry, and has just completed to the tune of finding this resistance here. Now, we know that gold and silver, specifically gold, does tend to have that really strong back end of November into December bull run. We certainly will be bringing it back into our daily videos as we see that get strong. But look at this, silver right on that peak there, 24.80, just underneath 25. We've got the resistance, we've got the previous supports. If we break through, what does the expectation become? Back into something like a 26, 26.50. So it is getting a little bit better here for these metals, and we're starting to cover them a little bit more now as they're heating up. Remember, when they're in consolidation, it's a bit boring covering them daily, but of course, when we get out of consolidation, they become very good trades. We've seen the same thing with oil. We've seen the same thing with plenty of stocks in the past. So everyone's talking about this one, Tesla. Oh my goodness, $1,024. This has gone now over 1 trillion market cap. It did it very quick, very fast off that news of the fleet being purchased. And it did look, it's a big deal, I think, across the board. It can be seen, but I think it's more than that. Over here, you might have been looking at a PE ratio of 1,000 or something for Tesla. Now, suddenly the PE ratio is becoming more in that 200 kind of level. It may be a little bit off there, but yeah, the fundamentals have definitely improved. We've seen them transitioning the business from just, a huge growth story to actually pulling in some numbers. And I've said it here, and even where I'm in Australia, the amount of Teslas on the road, it's way higher than it's ever been. And everyone wants one. I'm telling you that the wait list is huge. They're beginning to ramp. They're obviously building that supply chain out. And it's much more than just the cars. And most people that trade Tesla know this. So at $1,000, what becomes the next thought process? Well, we have a big gap now that's happened, plus a big ramp. Oh, look, you can't really go against a trend like this with Tesla. But yeah, maybe it's time to consider, do we use some kind of scaling concepts? We've seen breakouts before have big runs on them. And I think that's why it's hard pressed to go really against a stock like this. And you get those big runs, they go a lot further than you ever expect. So at $1,000, people are now going to be calling things like 1,500. Obviously, the Cathie Wood prediction of 3,000 is going to come back into the discussion point. And how do you follow a trend like this? Well, you've got to find a moving average that it's been bouncing off. And before, I would say it was the 2-hour 20. But the 2-hour 20 is pretty far behind now. So will it consolidate somewhere up here? Or have we just hit a new moving average? I think we'll probably get clarity in the next trading session. And for now, if you're in it, some people will be practicing scaling around 1,000. But I'd love to know what your opinions in the comments down below are. We asked a little while ago, what's going to happen with Tesla into the end of the year? What was your price target? A lot of people had 900, a few people had 1,000, some people had 1,500. What is it now based on this? Because I think we need more clarity from the technicals. It just looks like it's kind of going bullish and bullish and bullish. And I'm sure a lot of retail people will jump in on it. But overall, if you haven't been in it, it's probably a bit of a scary time to be jumping in. I mean, that was a big sugar rush. 2-hour 20 moving average is probably the one that I'm going to follow it with for now until we get more clarity on the technicals. Not too much going on in the options world for Tesla, so we won't really use that. It wasn't a huge amount of volume that really pushed it up. Just go back there. It wasn't really, massive volume. It was huge, but it wasn't massive for that kind of move. So yeah, we'll go back to that once we see more options clarity. Over to Apple, 150 remains the key technical resistance here coming into earnings. And of course, we've got that great support around that 146 with the 20/50 moving average here. This is the red and the blue lines, the exponential moving average, if anyone doesn't know what they are. And yeah, that's the area where we either get that little bit of a dip buy, or ideally, if we do get a decent earnings, we close above 150 and we're allowed to scale, of course, above that 157 into the 160, maybe even 170 range. Apple's options walls, a little bit more clarity here. The 150 strike, the 155 strike, getting a lot of interest this week. Not as much as it was previously, but yeah, certainly these are the key walls, or the core walls that we're looking at. And if the price action breaks above these, what happens? Usually it's allowed to free flow. So you see a lot of people jumping in on the stock, trying to get in on it, trying to ramp it up. And that's very important. But 150 is a key technical here for Apple, and you can see it in the options as well. FANG stocks doing a little bit better here, a little bit of recovery. And if you were trading the Monday session, you actually may have picked up the FANG, because the FANG did come back down, hit the previous resistance, found a little bit of buying pressure, ended with a daily hammer, which I think is pretty substantial. And one of the things that I always like to look at is, are the pullbacks similar? So are we seeing a bit of a similar kind of 2 steps forward, 1 step back? And I would argue we are. And if we also take the distance, what you'll notice is the distances are not exact, but they're certainly fairly close. So you can actually extrapolate this out a little bit to get an idea of where you think it might go to next. And that's predicting back into that 5,600 for the FANG. So come earnings, as we see these play out, we certainly may see some more opportunity. And there's plenty of opportunities in the FANGs. The FANG stocks are definitely slowing down. You've got the Amazon, the Apple. You've also had the Facebook, which we'll talk about now. And all of these actually are not doing that great in comparison to how much the market's already recovered. I mean, S&P 500's at all-time highs. Is Facebook? It certainly isn't. Is Apple? No. Is Amazon? Certainly not. So there is opportunity in tech right now if you like that sector, especially seasonal strengths in things like Amazon from a statistical background. If we have here Facebook, we're talking about this level, this 320. And of course, that was the daily 200. We've seen it spike bounce off that before, so it's been fairly strong. A lot of people are going to call this a double bottom now, and I think that's valid. We're going to fill the gap, it looks like, after the earnings. We're going to get back up in here into that 340. You can see post-market actions around 335, up 2% after the earnings. And overall, we have the support. We've got the resistance. You break the resistance, what's happening? You've got your double bottom in play, and that pushes back in to at least that 360, 370. And I would think it kind of goes towards the high. By many metrics, Facebook is cheap in fundamental lane, but overall, as we know, while Facebook's cheap, it has languished the other FANG stocks. So this will be one that I think a lot of people will watch over the trading session. Now we know a little bit more clarity on the fundamentals. We know they weren't hurt as much as Snap was. So once we get back through and we see technicals, breaking and closing, there could be a lot of opportunity in a stock like this. Move over to SPY. It looks like decision made here. We got that first indecision candle being the long leg doji. Bam, straight back into a close and a new all-time high. It looks like it's unlikely to fill those gaps anytime soon unless the earnings are really horrible from the FANG. And usually what happens is this. We'll probably get something like this, bit of a curve, move down, fill some gaps, and then move back up. Remember, we do know that gaps do tend to fill. 91% of all up gaps fill. The problem is, when are they going to fill? So if they don't fill in the first couple of days, it can take a long time. I think it's 75% of gaps fill, up gaps again, in the first 30 days, but you're not sure exactly when that's going to happen. So what I mean by that is we have the gap here. We have the gap here, which I guess didn't fill perfectly. We have the gap here that didn't fill. Markets tend to go up like this, and then they come down, and then they go like this. And they do that because they've got to get everyone in. So we're in optimistic earnings time. The earnings kind of starts to flow off once we see all those big ones come out. That hype, that anticipation, that goes back. It's like going and seeing a film. You're excited, you're excited, you're excited. And then sometimes watching the film or watching the big sports game is nowhere near as good as the anticipation into that event. You've all been there. You know what I'm talking about. It's the same thing in the market. So markets will often make new highs, then they'll dip a little bit, and then they'll come back around. Can we predict that right now? Not really. We're not seeing any signs of weakness here. I mean, we had a long leg doji, sure, but really, we've just had strength to strength to strength. Strong buying off the base here of the 20, strong weekly candles. That's the way we look at this SPY and the SPX at this stage. It's the exact same thing. Very strong looking and very strong supports as well, should it come back down to this 20. Even this 44.60 area on the SPX, very, very big. If we go to the options, again, not much clarity here, and that's why we're not using it as much this week. It all comes down to clarity within the options market. Sometimes it's helpful to you, sometimes it can confuse you, and that's why you've got to realize, what are you actually looking for? I call them put walls and call walls. We need clarity in those walls, and this right now looks convoluted to me. Plenty of puts open, quite a lot of calls open. I call that neutralized in the options market and not interesting for us to take advantage of. But these are the big levels if you're interested in those strikes. NDX, same kind of thing, still behind because the FANG stocks are languishing behind the S&P and the Dow, not at all-time highs yet. Pretty strong action here. We've got that resistance becoming support. It's consolidated, closed to a new all-high. We had that Facebook earnings coming out. As long as Apple, Microsoft, AMD, these types of businesses do well, then we tend to think that we're going to get a new all-time high in only a few weeks, maybe even a few days. It really is like that. And I think while Tesla clearly ran the show, if you look at Apple's return on this day, it was 0.03 down. Amazon was 0.46. Microsoft was down 0.33%. This was actually Tesla running it. It just shows you that it's becoming a bit more of a robust index. Maybe there's a few more companies that are coming up now and starting to push it around than just the old guard of the big ones. Tesla's certainly a big one now that we have to pay attention to. So Nasdaq shows strength. Looks like we've got temporary support around that 15,330. And then if it does pull back further, we expect buying control around that 15,000, 15,001, 2 area. Anywhere in here, you know, the turnaround could happen. It's looking quite bullish at this stage. We'll move over to the crypto market. And when we take a look at the cryptos, guys, again, Bitcoin, Ethereum, all looking quite strong. The really disappointing one, I guess, if you were trading crypto would be Cardano. It's still sitting around 2.14, so $2.15-ish for Cardano. We're looking at around 232 there from a resistance level. And until it gets that, we haven't really seen a recovery. If we're thinking about Bitcoin here, definitely strong tweezer action at this point. That was pretty strong stuff on the weekend. Clearly 60,000 is a zone that no one wants the market to go below at this stage. And there was buying into our little temporary resistance. And then will we get through that and on to all-time highs? It seems to be following a little bit of 17 right now. So if it's following 17, if I remember rightly, and we'll do a study on this, there was actually a small pullback coming back of October into November. And we saw that standard thing that happens in the crypto markets where coins go down like 20%. Then, of course, they go back and they went booming into the back of November into, of course, December. Huge strength. Always be prepared, guys. In the coin market, 20% is not unusual. It is not necessarily like a big bear bust or anything. It is fairly traditional. Like we've just seen one recently. Look at this, about 24.5% onto the way down. That's pretty standard. So always be prepared for that. If you're not prepared for that, then I don't know if you've traded the coin market long enough. 60,000 for now, strong support. But if it breaks underneath, we do expect that kind of flashing perspective on here. And the pullback recently has only been of the vicinity of around 10 to 11%. So yeah, there could be a little bit of weakness here coming into the crypto markets. Ethereum certainly looking very strong. This closure for the daily will be a decent deal. It's going to close here on my chart anyway in about 2 hours from the recording of this video. We closed above all-time kind of closes, and then we could move towards that 4,600, which is our eventual goal. Let's see if we can get to 4,600 before this whole market may have a little bit of a pullback. So that's going to be something that a lot of people are watching. Again, all the coins looking strong. A lot of the altcoins starting to wake up, and it's really Cardano that's probably showing the biggest weakness. In terms of big news ahead for the week, we've also got that core PCI price index for the US coming through on Friday. And do remember that we also have the Treasury currency report tentative at this stage. And on Saturday, daylight savings time for a lot of people for euro, pound, etc. So that means if you're in London, if you're in Europe, make sure you get your shifts correct for trading the US market. Thanks so much, guys, for watching the video. If you enjoyed it, please remember to subscribe. Of course, smash that like button. And congratulations to everybody out there that's been trading the price action on something like a Tesla or some of these other stocks that have been breaking out to the long side. I think it shows that, you know, when you trade the technicals, even if you don't agree with the fundamental analysis, when it looks strong on the charts, you've got to put your opinions at the door And of course, trade what you see. Trade that price action, guys. Thanks so much. See you in the next one.